Good morning, guys. Happy Good Friday. So here we go. Numbers are starting to come in, and it's kind of what I expected and what I was telling you about, oh God, months back, what to watch for. Because now we're starting to see the fallout. Y'all remember last year when I was telling you, watch the 10-year Treasury. Okay. When we got above 175, it was going to start to be the beginning to the end, panic time. And again, because this is how government borrows money. Okay. It gets more expensive. But I also told you too that the mortgage rates are pegged to the 10-year bond or a 10-year note. Okay. Well, now, as I'm recording this here at 5 o'clock in the morning on Friday, the 10-year has now got up to 2.82. So we're into panic mode, period. All right, this is it for the government. But also for the banking industry, which inevitably makes it for the individual, which inevitably leads to the destruction of the economy. And now we need to be able to prepare for this, potentially take advantage of this, whatever it would be. Now, I want to qualify this as usual before anything. I'm giving you information and analysis. I am not giving you financial advice. Take what I'm telling you and make your own decisions. I'm not telling anybody to do one thing or another here. Okay. So right now, with the 10-year at 2.82, if you guys notice, in the last couple of months, the 30-year mortgage rate has gone from about 3% to over 5%. Now, this is where we get into the first issue here with this. And I want you to take a look at something. Okay, take a look at this. I put this into a calculator this morning. Average wages in the United States. Okay, I just used Joe average across the board. All right, and I didn't put much to it, not bills or anything. Average wage in the United States about $51,000 a year, thereabouts, $4,326 a month gross. All right, so Joe average wants to buy a house. Joe average has $20,000 down. Yearly real estate taxes on that house, $2,500. Yearly homeowners insurance, $1,900. And I know some of you guys are going to say, "Oh my God, my real estate taxes are so much more," or anything like that. I'm just giving you averages. Okay. The average car payment for a used car, one car household used car, is $465. The average minimum payments that Joe average holds in the United States on credit cards, on average, if you took everybody in the United States, we each owe $110 a month for minimum payments on credit cards. Okay, so this is what I put into this calculator. Joe average, at a 3% interest rate a couple of months ago, could afford a $166,000 house. This is what the banks would approve him for. Okay, he can afford a $615 payment, which works out at 3% to $166,000. If I change this, and look at this second one, if I change this to 5%, where mortgage interest rates are now, okay, leave everything the same, wages, down payment, real estate, credit card, car payment, etc. Joe average can now afford a $134,000 house. Please, please, please tell me, guys, where in the United States you can buy a house for $166,000, let alone where you can buy a house for $134,000. Okay, maybe you can get yourself a trailer, or maybe you can get yourself something in the ghetto. Okay, at those prices, that's not realistic. Now, I want you to keep these numbers in your head. So now we get into the next part, and this is where I'm saying numbers are starting to come out. This is what I've been waiting for. Bank earnings have come out this week, or are starting to come out. Chase Manhattan Bank has reported, Citigroup has reported, Bank of America reports on Monday. Figure I'll go after the three big ones. All right. JP Morgan Chase, 42% profit decline from last year. Okay. Citigroup, woohoo! We beat earnings estimates. Yippity-doo-dah. You beat the estimates. The estimates have come down drastically. Citigroup's earnings down 44% from first quarter 2021. Okay. You have Bank of America coming out. Bank of America doesn't report until Monday. They are expected to miss by 22%. That would be great compared to the other two misses, okay? But the banks are missing earnings by, so far, 40%, roughly. What does this mean? You see all these people in the U.S. who aren't going to work, and the question comes up all the time of, how are people paying their bills? Nobody wants to go to work, et cetera, et cetera, et cetera, right? Big question. A lot of people are, when interest rates were low, 3%, a couple of months ago, hey, let's refinance the house. Okay? So they refied the house. They cash out refi. You've all heard this, right? Great. So now they're refinancing the house. And they're living off that cash. Time to pay the piper. Because now, as interest rates go up, mind you, this isn't just on mortgages, okay? Interest rates are going to go up everywhere. Variable rate credit cards, car payment, what the bank's going to loan you for a car, whatever it would be. Interest rates are going to go up. It's going to make it harder and harder and harder for Joe Average to be able to buy something, to buy a house, to buy a car, to, get a credit limit on a credit card. This is what you're seeing with the banks. The banks are expecting to have to bank more money because they're expecting a lot of the loans they've written to go bad, especially these people who have been on adjustable rate mortgages, credit cards, which are adjustable rate, et cetera, et cetera, et cetera. Now, what does this mean? Think about a lot of businesses who have a line of credit that they work off of. Their line of credit interest rate goes up too, okay? If you think the grocery store is writing checks to the distributor every time the truck full of lettuce comes in or the truck full of meat comes in, or canned goods or whatever, you're sadly mistaken, okay? They've got a line of credit with the bank. The distributors all send it to the bank, if you will, the accounting department. They pay it off the line of credit, and then they pay back that loan monthly or whatever it would be. Their interest rates are going to go up, which means the price of your food is going to go up. So what we have here, guys, is the price of everything is going to go up. I mean, there are stories out there, and again, I want to remind you this. Remember what I've said many times, where watch what happens in Europe. It comes to the United States. Remember me telling you a week or so back about Germany raising the price of food 30 to 50%, which did happen, okay? There are stories now that that's going to hit the United States sometime this summer. Imagine your food bill going up 50%. Imagine people who don't have a job who refied their house and their food bill went up 50%. There is nowhere else to get the money, okay? What you're going to see this summer, and I've said many times, cash is king. Whatever you've got right now, liquid, and to buy tangible assets with it. What you're going to see this summer is a complete collapse like we saw in 2008, 2009, except this time it's going to be worse. You're going to see cars, the classified ad section, cars for sale like crazy. All the toys the people have, the ATVs, the boats, the, whatever, the motorcycles, the dirt bikes, pages and pages and pages of them. Then the next thing you're going to see are the foreclosures, because the people can't pay the bills anymore, and they borrowed themselves up to here. Now it's time to pay the piper. They have no way to pay the piper. The bank's going to come in and take the house. Jamie Dimon, CEO of JP Morgan Chase, has said flat out, the banks are expecting this. Okay, that's why they are parking more cash, because they know they are going to have huge, huge tax or loan problems. Okay, what it means for you and me is those of us who are out of debt or damn close should be okay. Those of us who have a fixed rate mortgage down in the 3s should be okay, provided your job stays good. If you're looking to buy land, a house, whatever it would be, yes, you're going to pay more in a mortgage rate, but you may steal that house, if you will. And I'll give you a quick story. This goes back to when we lived in Vegas, and we had bought our house in January of 2017 there. Okay. Nice house, 2,000 square feet, whatever it was, cost us $245, $254 is what we paid for it. The neighbors next door had a similar sized house, probably 1,900 square feet, thereabouts. They bought in 2009. Nice neighborhood, okay? Nothing fancy or anything like that, but I mean, nice neighborhood. They bought the house in the market crash for $97,000. They actually had to raise their bid to $100,000 so the mortgage company would write the mortgage. The mortgage company wouldn't write a mortgage for under $100,000. Okay, so they actually had to up their bid on the house, but they got it for $100,000. 9 years later, I got a similar house for 150% more. That's what you're looking at here. You are going to see a market crash in the housing market. You will probably see the prices, well, not probably, you'll guaranteed see the prices of used cars plummet. They've gone up so high, they're going to go back down. This is the only way the economy can survive, because as interest rates go up, you'd think the bank could be making more money. Sure, okay? The problem is the people that aren't paying the notes. Now it's zero when the bank's out that money. The government is the same way. They've got to pay higher interests and whatever it would be. Start putting all this together, guys. Economically, this summer is going to be a complete train wreck. Get your financial house in order now. If you're looking to buy property, my advice would be to wait. Start stocking cash to do that, okay? If you are sitting on cash, precious metals, no, I know we'll inevitably get the spammers in here that say, Bitcoin, Bitcoin. No, okay, I'm telling you flat out, no. But again, this is what's going on. We're starting to get whacked with this, and this is going to be a big time financial crisis that's going to make 2008, 2009 look like a walk in the park. Pinball out.